Hey family, welcome to my YouTube channel. Tap the button below to subscribe and tap the bell icon so you'll be notified every time I post a new video. This video is for all of my beginners, everybody who's thought about buying a home or just had more questions about the process. Enjoy! Hello everyone, my name is Jazmyne the Realtor or the Millennial Property Coach, and I am here to have a home buyer seminar for our guests. I know we do have some folks that are out in California. We also have some folks that are down here in Camden, New Jersey. So we have folks that are spanning the country right now that are coming in to watch this home buyer seminar. So I wanted to go ahead and give a small introduction to our guests. We have Mitchell Freedman, and we also have David Leny. These are basically our guests for the night. They are amazing. They have a wealth of knowledge. Obviously, I wouldn't bring anyone to you that I wouldn't recommend myself. These guys are awesome, and they have a wealth of knowledge. So I'm excited for them to join us. Welcome, you two. I'm so glad
Thank you.
Thanks for having us.
Of course. So I'll just do a little spiel for those, because I do have some new folks that actually just joined. I'm actually still adding folks now to our Facebook group. And give you a little bit of information about myself. Okay, so I'm Jazmyne the Realtor. I am currently a doctoral student. I do research and I'm a policy analyst. I'm all about community development. And I experienced homelessness in my undergraduate years, which pushed me into understanding the importance of housing. And not necessarily because I didn't qualify for certain housing options, but also just because I didn't know where to look or how to get a property in that case. And I'm actually right now currently going through the process to buy a home also. So I figure why wait until you're X age to buy a home? You definitely can buy a property. And definitely the rules have definitely changed over the years. And so we'll definitely have a conversation about that with our guests. I wanted to go ahead and let our guests go ahead and introduce themselves. Mitch, you want to go first?
Sure. So my name is Mitchell Freedman. I am with Gateway Mortgage. I've been in the mortgage industry just going on a couple years, about 20 years now, and have been a processor, an underwriter, and I've been doing sales for about 13 years now. So hopefully I'm a resource for all of you guys to learn more about the buying process, what's available to you, and what's out there. A lot of years of experience.
Awesome. What about you, David?
Hi, everybody. My name is Dave Leny. I work for National Integrity Title. National Integrity is a full-service title insurance company in New Jersey and Pennsylvania. I've been selling title insurance for 11 years, been with National for 8. And I just really enjoy helping people get to the table and closing their deals.
Of course. That's what we like to hear. That's what we like to do. So I'll just go ahead and get started. So where do we start? Overall, as a realtor, the first thing I tell my guests is I try to keep it short, especially in our introductory calls. I'll just keep it simple. There are 3 steps that I usually have people try. Those of you who are currently in the Facebook group right now, there is a home worksheet for this workshop, so you can download that PDF and use that, print it later, or take notes on your own so that you can kind of keep some of this information for yourselves later. The first question on that sheet is, what are the 3 steps that I usually take my clients to? And so I'm going to go ahead and give that to you now. The first 3 steps, I say there's the money, there's the shopping, and then there's what I call CQC. Most people say TLC, I say CQC. And I'll go over what that means. Money meaning you need to speak with a lender. If you are looking for a home and you are not paying in cash, you need to speak with a lender. Not only because we need to understand where you are in the process, but also we need to kind of plan out if there are some things that you are maybe wrestling with in your person. And Mitch can definitely talk to you more about this a little bit later. But if there are some things that you're dealing with that you need help with, you absolutely need to speak with the lender so they can help you set you up for success. The second thing is shopping. That's when once you know how much money you have to purchase a home, I take you shopping. I take you all around the state, and I'm actually licensed in both New Jersey and Pennsylvania now. So I definitely can help you all in both states. And so what I do is I take you around to look for houses that meet your criteria. So it's important for you to know what that criteria is. Do you want a townhome? Do you want a condo? Do you want a single family? Are you looking to as this to be an investment property? All of those questions we need to know so that when we're looking in certain areas, we're doing what's best for you and making sure we're matching up those things accordingly. And then the last thing I call CQC, which is basically contracts, qualifications, and closing. Right? It's a whole lot that happens after you choose a home. And what's important about that is that all you need to know is that you choose the right realtor for you that best suits your needs so that you can be able to get to closing. And buying a home is a team sport. You're going to need a team in order to get it done. You're going to need a title company. You're going to need a lender. You're going to need an appraiser. Some of you may even opt into having an attorney. And so all of these people that you come in contact with are going to help you get to your dream home and get you your new keys. So it's really important that you understand and surround yourself with folks who you feel comfortable with and also that are going to get you to that closing table, like David said earlier. And so what part does lending play? What part would you say lending plays in all of this, Mitch?
So lending plays is you want to search for a house. That's always the fun part. But before you do that, you need to know, what do you qualify? You're looking for a house you actually qualify for. Do you not qualify? Can you qualify and have more options available to you? So lending plays a big role. Before realtors want to take you out, before people want you to see their homes, they want to make sure you're pre-qualified. Pre-qualifying is going out there, talking to a lender. We look at your work situation, your income, where's it coming from, your assets, your credit, and determine how much house you can qualify for. When we do that, when we determine what you qualify for, then we set you on your way to go shopping. The advantage of talking to a lender early is that if there's any situations with your credit where you might not qualify for as much as you want to, we're going to put you on a plan to get there. So there's many advantages. The sooner you talk to the lender, the better off you are. So we can, look at a long-term plan to get you where you want to go. If you qualify, everything's great. We're going to send you on your way right away. But it enables us to work with people that might not qualify right away, put them on a plan. So I always say 6 months before you're ready to buy, come talk to your lender.
Awesome.
Now, if you were looking for a place to take a break, now's the time. Go ahead and grab a snack and come on back. Check the description box for the link to the PDF I keep talking about so that you can follow along with the handout. And go ahead and leave comments below about any new questions or information you'd like to find out about real estate. I'm always here to help.
Awesome. And David, what part does title play?
So title is kind of an unusual insurance, and most people have never heard of it until they're going to buy a home. So unlike any other insurance like health, disability, life, homeowners, that's all about future events that could happen. So you're paying into it, to protect yourself. Title insurance covers the past and not the future. So instead of a continuous payment, it's a one-time payment that you're going to pay at closing to ensure that the title or that the property that you're buying, it has clear title. And what that means is, people's financial problems often will attach itself to their biggest asset, which is usually their home. So unpaid taxes, mortgage, mechanics liens, all these liens and judgments will attach to the property. So we want to make sure that when Mitch pre-quals you and Jazmyne finds that house for you, that you're not playing from behind here and got all these problems and burdens onto a home that aren't yours. So we protect you from that, give you that peace of mind. And when you really come to think of it, the mortgage company is taking the biggest risk of all because they're lending the majority of money. So the mortgage company, it's required title insurance if you're going to obtain a mortgage because, just like any other mortgage company, Mitch's company is not going to, let a deal go through that isn't protected by title and doesn't have clear title. So another thing we protect is deed forgery, improper error notification. That's a little bit of a different one, but there's a laundry list of things that title protects you from. But the biggest one is just those obvious liens and judgments by taxes, mechanics liens.
Awesome. I know we're still in a pandemic, and it's kind of odd to folks that folks are still buying houses and moving, and trying to figure out and sift their ways through this. Some folks are also losing their homes, and so the next topic we have is market watch. Like, how is the market? What do you all think about this market? What is happening right now?
So, want me to go?
Yeah, sure. Go ahead.
So I'll go. Look, rates are, even though they've ticked up a little bit over the past couple weeks, they're still at a level that they're historically low. So if there's not very much positive coming out of COVID, it's these low interest rates. They have fallen dramatically. Just a couple weeks ago, you were in the 2s on a 30-year fixed. Even today, when they're in the 3s, it's still one of the lowest rates you've had in history. So, before this, you can still buy a house today, get a rate in the low 3s, which gives you tremendously more buying power when they were in the 4s, 5s, or 6s, or some people even remember when they were higher than that. So, it's kept the market busy. In our area, a lot of people are fleeing the cities, going to the suburbs. So we're struggling with inventory. The market's very strong. We have a lot of buyers out there that are looking to buy and just can't find properties. This is happening a lot all over the country, but it has made it unusual to do closings, and things are handled remote, and a lot more Zoom calls and videos to do applications. But overall, the market has maintained strong throughout the past year.
Awesome. David, how has the market changed for you?
Yeah, I mean, like Mitch said, interest rates were insanely low last year. They're still very low, very competitive now. We're definitely more in a seller's market. It's definitely they have all the advantage. But I think this inventory problem might even itself out a little bit coming into, now we're coming into March, we're coming into the spring market. At least I know in New Jersey, we had a lot of snow earlier, but it started to warm up a little bit. And as that weather gets better, and Mitch has been doing this many years too, he sees as the weather gets better, you start to see those houses getting listed. And so hopefully the two ends kind of meet now from sellers to buyers, and that'll even out the scales a little bit, because I'm sure Mitch is getting bogged down with pre-quals right now, but people that just can't find homes right now.
Right.
Lots of pre-quals right now.
Yeah, a lot of pre-quals. But I
waiting to buy.
I think we're going to have a fantastic spring market this year, because I really do see. I think there's going to be that FOMO for the people that listed, and the neighbors going, wait, what did you get for that house? What your house again?
Right.
And I got to get my house on the market, and then I think it's a great opportunity, obviously, for retirees that maybe you're looking to get out of the state or downsize.
Right.
Definitely a great opportunity for them as well.
Yeah, from a realtor's perspective, that's exactly what we're saying. I would say some of it is, for those of you who don't know, seller's market is meaning that the sellers are pretty much in control at this point. A lot of sellers are not offering things like seller concessions, which would help you kind of ease some of your closing costs. Those opportunities are not necessarily available as much anymore, although there are a few in between. There are some in between. Sellers differ property to property, and so the house you choose, you meet a different seller at every house. The other thing that we're seeing is buyer fatigue, in that folks who have tried to go buy houses back in, let's say September 2020 and couldn't find anything, are now trying to stay in the game January 2021, and now are well, we're still not being able to find our home, and want to give up in some ways. And now's not the time to do that. Now is not the time to do that. One, because of the interest rates, like Mitch already said. And then the other reason why is because your house can come on the market, your dream home can come on the market at any point. New homes come on the market every day. And what I help you do is to be able to be able to see those homes before they come out. So if you are connected with the realtor, you have access to something called the MLS. And that is where people put their properties on the market so that everyone can see them. And there are titles such as coming soon, or homes that are already active. If you have homes that are coming soon, it gives you the ability to look at homes before they come on the market, so you have a fighting chance. And in order to do that, you have to be connected to a realtor. I'm seeing a lot of people that come from sort of these social media sites or these social media sites or applications such as Zillow, Trulia, Redfin, a lot of times. And it's great to look at those homes to get an idea of what you're interested in. But it's also very important that you get connected with a realtor and have access to the MLS, because you could be looking at a home on Zillow and it could be gone within the next 24 hours. Homes are flying off the market at this point. Something you'll see on Monday might be gone and sold on Sunday. And so it's very important that you get connected and that you set yourself up with the winning team. And like we have here, so it's very awesome that we have these guys with us to give us this information. But I just want to let you know what's happening with the market right now. How would you say COVID has changed the home buying process? Has it helped at all? Does it make anything weird or concerning? What should buyers know?
I think it's definitely forced us to do business more creative in different ways, from taking the application. I mean, Dave's company is as creative as could be with setting up tents outside to host closings. We're doing everything in the state of New Jersey to keep the market going. So, with COVID, it's definitely moved technology forward on the way we close people. Hopefully some of these things will stick long term. It's helped some of the remote signings a little bit, but we're trying to be as flexible as possible at every step of the process. Whether it's going to a closing and signing, whether it's getting applications signed, it's doing consultations. We adapt to different tools every day in this industry. We're restricted because we do need some live signatures and different things, but it's definitely changed the normal routine way we used to do things.
Right.
We lived in and there's two different worlds we lived in with COVID. There was March, April, May, and then after that. And really it was two different, because March, April, May, felt like the end of the world, and really, and in hindsight, it was very scary. We're not totally out of those times yet, but it was. And, that's like Mitch said, we set up a tent outside, had people not coming into our building. We really followed, and we still follow all the protocols of, masks inside. But now we are, allowing people to come inside to close again. And, again, they have to wear a mask. But where we've learned, and what's going to probably stay, post-COVID is, just getting sellers to sign early ahead of time so they don't have to be at the settlement. That can speed up the closing, a bit right there. I think the one thing that comes out, not just in our industry, but in a lot of industries, like a positive out of COVID is technology, like what we're doing right now, remote notarization isn't, you can't do a closing in New Jersey remotely, in a sense of like this and under like a DocuSign or .loop. You still need wet signatures as required by lenders, by, the county you're in. But all that's getting sped along by the governor and by other parties to try to push that kind of technology along. So maybe in a few years, I think we're looking at in a few years, closings won't even be done in person anymore. So you'll probably, those are the good things that I think can spring from the ashes of this a little bit in our industry. So it's really just showing, like Mitch said, it's just making everybody more efficient at what they did.
Yeah. I would say on the realtor side, so you still have to wear a mask going into folks' properties. Some folks provide you shoe booties so that you don't mess up the carpet and things of that sort. And because of the concerns of COVID, they have you cover your shoes or take off your shoes before you enter a home. They do, some realtors leave like hand sanitizers. I bring hand sanitizer with me if any of my buyers have concerns. Another thing that I would say that has changed is open houses. And so I know in some areas, open houses is kind of like, what is that? And then in others, open houses is kind of an exciting time. But generally with an open house, it allows you to come in and view the property the day it comes on the market or the weekend that it comes on the market. Some realtors like to provide food and snacks so that just to create community and also to allow the surrounding neighbors to get a feel for whether or not they want to sell their property or buy the one that's open. There is no more food. Obviously, COVID has kind of taken that sort of community aspect away. Only maybe one or two groups are allowed in a home at a time. And though if there are more people that want to see the home, they're asked to kind of wait outside the door until one party leaves and one party goes through, kind of like a one door entry and exit kind of process. But it still allows you to see the home, still allows you to ask questions with gives you more time, if you ask me, to spend time with the realtors that are in the homes to ask them questions about the property or ask any concerns that you may have. Those things are still available to you. And I do think that COVID has kind of allowed us to kind of build relationships with folks easier and answer more questions because we have more one-on-one time with the guests when they come in the home. Other than that, I think those are sort of the constraints. I mean, obviously in New Jersey, we have weather conditions as well that we have to worry about. So when there's snow or any kind of a weather advisory, we have to advise clients to try to not go and see homes, and we try to do virtual tours. And that option basically allows you there's two options. You can have the realtor. So myself, I bring my cell phone with me. I video chat with you and walk you around the home that way. Some realtors have for their listings drone videos or have already captured videos of the home and have put them online. And so we can share those videos with you so that you can get a walkthrough tour without being physically present. Those are some of the options that we have if you can't physically get in to see the home. But we always say, even if you can't get into the home, to kind of drive by the neighborhood to see if that's something that you actually want, especially if you want to get put in an offer quickly. Even with trying to put in an offer on a home, most folks would like you to see the property before they even accept your offer. That's also been a concern recently as well. Putting in blind offers to some folks, it works. And to some agents, or some sellers, they won't accept it. So just be mindful of that. If you do get a chance to see it, try your best to be able to see it either virtually or in person. And so I want to go through like just a blanket because we have very new people who are very new to the home buying process. And so we just kind of want to go over like what is a normal market? What is the home buying process? So I would say it would start with me. You would look at different properties. You probably could either bump into either me or Mitch first. When you're looking for your home, some people already know to go to a lender first. Those who don't, you would be either looking online or something of that sort, reaching out to realtors in your area. You can look them up now. Facebook is also sort of a realtor directory at this point. And we take you to go see home. You get pre-qualified first. And that's what I always recommend. So Mitch, what happens when a buyer comes to you and they
So when you call me, you get pre-qualified. The first thing we're going to do is have a discussion and get some general information about what you do, how your credit is before a good lender even talks to you about pulling your credit. They want to sort of get the story first because we don't want to do anything if you're having credit challenges that are going to hurt it more. But the process, once we go through that and we talk about pulling your credit, we get some basic information. That information is like your date of birth. Are you married? How many people are living in a house? How many people are going to be on the loan? What's your income situation? We try and get a 2-year, typically, history of your job. So it's about a 20-minute interview questions that we ask you. We then use that information. We pull your credit. And within a couple minutes, we can know based on your income, based on your assets, based on your credit. And then when we look at the credit, we look at the debt versus your income, how much you'd qualify for. And then we go through different scenarios just because we can qualify you for a certain amount, you might not be comfortable with that payment. I could say, hey, you qualify for $1 million and your payment's going to be $5,000, and you might be like, hey, whoa, Mitch, I'm only looking for a $200,000 home, and I don't want my payment to be more than $1,500. So we're going to make sure we're both on the same page. There's a ton of variety of programs out there too. You have jumbo financing, conventional, FHA, USDA, VA, grant programs, and you're not going to be the expert on all those programs. But when you work with a good lender, what you're trusting is that they're looking at all these options. So we're considering all these options when we pre-qualify you. And then as you find houses, we're going to relook at those options again. It's a very competitive market. So some people just only are taking conventional offers, and you might qualify for FHA, USDA, and conventional. So we're going to have a discussion and see, A, which gives you the best payment, which gives you the best chance of winning that house. And we're going to work accordingly to try and win you that deal with the best mortgage we can possibly put you in. So there's a lot of moving pieces. And as you look at different houses, those scenarios could change as well. So one might qualify for one program that one doesn't. So every time you find a new house, it's a whole new discussion on what you're going to qualify and how we're going to approach it. So you want a lender you can trust, work with, is very responsive, looks at your financial situation, has a good understanding of it, and if there's work that needs to be done, can help you to get to that point. So, we're there with you from the beginning of the process right up until the time you close, and then we're with you afterward. You're still calling us after you close, asking us questions about different things and making payments. So, a good lender is one that's going to do all those things and work with you along all those steps. But that is the process in a nutshell. And look, some people feel very uncomfortable talking to a lender. They don't like talking about their personal financial information. My advice to you is share it up front. We're going to find out through the title work if there's judgments against you. We're going to find out when we see your credit. Our thing here, I guarantee we've seen it all. We're not here to judge you in any way. We've all had the same issues and concerns and worked with people. So there's nothing to hide. Hiding only causes problems down the line. So, with your work history, with your credit situations, especially we have people that right before closing don't tell us. And even though we say don't spend any money and don't buy anything, they go out and buy cars or furniture. And that could really prevent you from being able to buy a house in the long run. So I'm sure Dave can share stories with you as well. But we've all seen some horror stories out there, what people have done to jeopardize their chance of getting qualified. But, generally, it's a pretty smooth, easy process. It takes 15 to 20 minutes, and you're pre-qualified, ready to go. And then once you find a house, we're working towards getting your pay stubs, bank statements, all the supporting documents to get your mortgage approved as quickly and efficiently as possible. So that's the process in a nutshell.
Right. Thank you, Mitch. And so basically after that, after you get pre-qualified, I will take you to go see homes. We would shop in the within the criteria that you give me. You tell me, once you say, I love this house, I would be mad if it was gone tomorrow. We put in an offer. And after we put in an offer, we don't stop there. I will continue to take you to see homes. Why? Because you have to have the offer accepted. So that's the huge piece. Once you put in an offer, it doesn't mean that you get the property. You have to have the offer accepted, which means the seller says, yes, this is the buyer I'd like to work with. And when the seller makes that choice, they're looking at your financing. They're looking at, which is the pre-qualification letter, which is why you need a really good lender. It's just a pre-qualification letter or the proof of funds. So if you want to pay cash, you've saved up, this is something that you want to do, you have it in the bank account, more power to you. What I always say, take a photo of, you can do a screenshot of your account, but scratch out any sensitive information. So we don't want your bank account information. We just want the name of the bank, your name saying this is your account, and how much money, which is the amount of money that you would to purchase a home. And so as long as that we have that, and it could be a bank statement, it could be a letter from the bank saying, yes, this person has this amount of money in this account with us, seen it, blah, blah, blah. That works as well. There are different ways that we can get proof of funds, but that's also an option too. So there's financing and also proof of funds. Once you get your offer accepted, the party starts and it's time to go into contract. And so I would either myself or the seller's agent would write up the contracts. And in that you would, within a certain, I think our contracts in New Jersey are 5 days. Within 5 days, you want to be able to provide an earnest money deposit. And this says, I'm confident that this is the property I want, and this is how much I want it. So usually with the earnest money deposit, we always say it has to be at least 1% of the purchase price of the home or more. And that depends on the range of the properties that you're in. I always say, we want to start with on the low end, 1% of the purchase price. But if you want to show a little bit more effort in order to get your offer accepted, you want to go ahead and put a little bit more down in earnest money. So instead of maybe $1,000, you put $2,000 or you put $2,500. It shows that you're really serious about buying the property and makes the seller that much more interested in working with you as a buyer. And it puts you ahead of the game when it comes to looking at choosing offers that are choosing offers for the property on the seller side. And so once you do the earnest money deposit, we drop it off to the title company. So David, what happens? What does title do in this whole process?
It's a magical experience. Let me tell you. Yeah. Once the contracts are signed, yeah, we come in at the very end. I mean, yeah, we run the search, and as soon as because again, we're more laser focused on the property above all else, and you know, because Mitch has already kind of run the credit and done all that. There's some things we look at in the buyer, but most of our focus is on the property. When that comes back, our examination team makes sure that anything we see we can clear and you know, make sure that property has clear title. So we will then send what's really important is the title commitment to all parties. The title commitment is our promise to insure this property, and at that point, you know, we're ready to schedule closing. You know, and you know that's when you're really partying, because once you make it to the table, you know, there's really no turning back. But yeah, I'd say 90% of my deals, you know, that we get, most of them close, you know, but I'd say the things that make a deal fall apart are home inspection. I'd say most of the time that a deal falls apart is like a bad home inspection. Will kill a deal. And a little bit because of COVID, but I didn't see as much as I thought I would last year, was employment, you know, termination, because they no longer qualify for a mortgage. I thought I'd see more deals fall out that way, but I didn't, but there were still a fair amount. So really, those are the only couple of reasons. If they just no longer qualify for a mortgage, that could make it go away, or like we said, like a bad home inspection. But yeah, assuming the title commitment's good, we're ready to close. You know.
Awesome. So that's the exciting part. So once we're getting to the closing table, so I want to back up just a little bit. David did mention the inspection. So there are a couple things that you want to be prepared for as a buyer, that you would have to pay for out of pocket. One is being the appraisal. One is the attorneys. Also the attorneys, some attorneys do get paid at closing. So you don't necessarily have to worry about that right away. But the most important is the inspections. And I do have a team of inspectors as well, so we definitely can give you a list of inspectors to choose from. But what the inspectors do is come in and say, yes, this house is okay to live in. It doesn't have termites. So with certain financing, you have to have certain things inspected. You have to have your house inspected for termites. You have to have it inspected for pests and X, Y, and Z. In New Jersey, radon is a huge issue. And so some houses, especially if you're looking at a single family home, it's in the rural areas, you definitely want to look into having a radon inspection. There's all types of inspections. If your house has a pool, there's a pool inspection. If your house has a cracked foundation, there's a foundation inspection, foundation inspector person. So there are lots of inspections that can happen. But the idea is that the first one, you definitely want to have a little bit of money saved up in the bank to be able to pay for an inspector. And inspectors choose their prices. generally, and I would say it save anywhere from like $500 to $1,000, depending on how big your property is, because it also goes by size and also what you're looking for. So some inspectors also have drones where they can also inspect your roof and include that as a part of their package. That's also something that can be done for you. It depends on what you're interested in. Now, if you're interested in like a condo or and in some cases the townhouse, you may not need all of those inspections, and some of the pools and things of that are all community oriented, so none of those things really apply to you. But those are some things to kind of keep in mind, is that you want to have a little bit of cash on hand for things like an inspection, an appraisal, and you want to be able to choose an attorney if that's something you feel you need. So we've talked a lot about what COVID has done. We've talked about a little bit about what the process is. But I've heard a little bit about these horror stories. So the next session is just to talk about, like, what are the buyers' bewares? Like, what should they do and not do? I would say on the realtor side, don't ghost your realtor. Like, don't ghost your realtor. You don't want to do that. You don't want to not respond. One thing is, because when you're putting in an offer, I can write up the offer, but you have to sign the paper in order for it to be official, for me to be able to send it to you. So you don't want to say, oh, I said I wanted to put in an offer, like I'm good. It doesn't work that way. You have to sign the paperwork as well. One, to make sure that you're okay with what has been written on the paper in terms of the offer, in terms of the terms and conditions that we've discussed. And also, you want to make sure that you're a part of that process, because if your offer goes out and it gets accepted right away, that could happen, or it could get accepted later on down the line. You definitely want to be in contact with your realtor to know what's happening, what's going on, and also to make sure that you're still looking at other houses. You don't want this to be the end all be all. Just because you put in an offer, that doesn't mean you leave. And also, if your offer gets accepted, you should still be submitting paperwork to your lender. You need to make sure you have all your ducks in a row. And I'm definitely the person to help you, guide you through that. I make sure it's my job to guide you through the process. And you want to have a realtor you trust, because you want to be able to listen to their instructions. If the realtor is telling you need to go get a cashier's check for your earnest money deposit and it needs to be in by this date, you want to do that. And the realtor has to trust that that's what you'll do, because that is also a part of the contract. And we don't want to miss or mess up any or kind of conflict with any terms and conditions that are in the contract. That's not where we want to be. So a really good idea for you is to choose a realtor that you trust, and not to ghost your realtor at any time, because you want to be abreast upon things that are happening throughout the process. What other do's and don'ts do you all have for our buyers?
I'll give you a couple. Don't buy a car in the middle of the process. Don't quit your job in the middle of the process. Don't get fired from your job in the middle of the process. Harder to do, but yeah, the biggest ones are people buying things, people putting offers on other houses, and they're buying this house and want to buy another house. So anytime you do anything financial, it totally changes the structure of your loan. Don't get married in the middle of the process. That's a title and a lending nightmare, when all of a sudden your marital status, your name changes and all. Don't have multiple homes that you don't tell us about. That's never good. We've seen it all. I've had all those issues happen at one time or another. So, yeah, I mean, you just always want to keep your lender informed, keep your realtor informed. And if there are any changes, a lot of times we can work through it, but we need to know about it. The quicker we know about it, the quicker we can make sure we can work through it. So sometimes, life stuff happens, no joke, some people do lose their jobs, and in many cases they find their jobs. But we have some people who think they're improving their situation by accepting another job, but now instead of having a base salary, they're commission, and we can no longer use their income the same way. So before you do anything like that, you always want to, if you're in the middle of thinking about buying, you want to check with a lender to make sure that's not going to affect you down the line. So,
right. David, what about you? What are your buyer bewares?
Yeah, so they're not going to really do much with title insurance, because there's just not a whole lot that the buyer's going to be in control of at that point. But I'd say the don'ts are, one to pertain with working with you, Jazmyne, don't haggle over, furniture or something, in the home. because that's a quick way for a seller to like not like you and go with another offer when you're trying to strong arm that sofa or that TV or something. I wouldn't overly press that, especially in a competitive market, because they'll just go with another offer and not want to deal with you, because they'll see that as a hint of other things to come.
Yes.
And I'd say another one is, when it comes to mortgage, it's very, very, very important. I would say use somebody local like Mitch if you're in New Jersey or Pennsylvania. And I'm not to badmouth other companies or anything like I know there's like Rocket Mortgage is really easy to get, pre-qualified. It's an application and a lot of people use it. But unless you're like in Ohio or wherever they're based out of, I'd say you want to use somebody that can come to that settlement. Like Mitch shows up to all his settlements. I think that's important. That you're going to use somebody that is accountable to you and that will be there, and not just somebody on a phone or on an application. I don't think you're going to get the same kind of level of customer service because, like I said, the mortgage, I can't overstate how important that part of the process is.
Yeah, it is. It really is important. I would also say, in a seller's market, I think you all also have to realize that it means that the buyer has a little bit less negotiation power, right? And some of that happens even before you get the home, in the sense that you're looking at a home. It's, let's say, $179,000. And it's within your pre-qual range at whatever 190. And then there's 3 other offers on that one house. What happens then at that point is that the seller's agent can say highest the best. And that just means everybody tell us how much you are willing to pay for this property in order to get it. That means everyone's going to offer more than the current price of the house. And that can put you out of your qual rate. And that makes you unqualified for the property then. And we can't necessarily continue at that point. And so that's on the front end. On the back end, it happens just like David said. You saw a couch in the house that you really wanted, or you see that they have a security system that you want to snag, or a refrigerator that you want to keep. If it is not on that MLS sheet, and if you have a good realtor, your realtor will give you a sheet when you go to that house, and it has a section where it says inclusions. If it's not in that section where it says inclusions, don't ask for it. In this market, don't ask for it. Ask your realtor and see if there's a way that if it's something that you're really, really interested in, we could sort of negotiate it in a way that you can kind of pay for it on the back end, possibly. That's also an option. But it's very important that you just stay close to the inclusions. The part where it says these are the things that are included in the house, that's what the house comes with. Everything else is not necessarily on the table. And that's why having access to the MLS is so important, because if it's on the paper, it's yours. If it's not on the paper, it can't be. And in some ways, you'll get to closing, and there you negotiate it to have the ceiling fan and the TV stay, and it's not there. We can definitely get that back if it was a part of the original offer or in the contract if we decided to write it in later. But it's very important that you try not to strong arm sellers at this point, especially if you want to get the house you're choosing. And so we're coming up on the sort of the end of our seminar. I wanted to go ahead and give space and time and opportunity for our partners' pitches. What do you do, and what does your company offer, and why should we work with you?
So, look, I think I talked about a lot of that. So Gateway Mortgage is in about 45 states in the country. We lend all over the place. We get our business not from these national commercials, but word of mouth. Our business comes from treating realtors well, treating clients well. We're always going to do what's in our client's best interest. If that means not using us for any reason, we're local. Most of us work in our communities. And what that means is we're held accountable for what we do. We're also very familiar with the local programs out there. So a lot of these national companies don't know that the state of New Jersey has a program, or that local counties have programs out there. So, we help you in other ways find available grant programs out there. We're educated on the specific area. For instance, New Jersey is a very unique state with high taxes. not the only one, but one of few that taxes impact your mortgage payments so much. So using a local lender like us is going to make your job easier, going to make your life easier, going to make the whole process easier. Using a group that you can know and trust and recommend makes it a much more better process. Realtors always feel that way, and the more you can help control, the more control you can help have, the more you're helping your clients. So that's why good realtors use people they know and have a lot more control and say over the transaction. Just makes for a much better transaction. But I'm here to serve all your mortgage needs. I'm available 24/7. Can call me in the evening, weekends, weekdays, and
I'm gonna call you 4 in the morning, Mitch.
I'm here. Believe me, I've done it before, so will not unfortunately be the first time that has happened to me. So more than welcome. But that's it, guys. And all of your mortgage needs, we like I said, serve all over the place, and a riot of programs, FHA, USDA, jumbo, whatever you need, we can help put you in the best program possible.
He's definitely telling the truth on that one. David, what about you?
We talked about accountability, and I'm accountable to Mitch and Jazmyne when I work with the customer that they refer, and more importantly, I'm accountable to you, the customer. So in making sure that you have everything you need. I think why National Integrity is great is we really embrace technology, which I don't think a lot of our competitors are really jumping on yet. We noticed the trend that especially millennials, they're Google searching everything. They're looking at reviews, and so we feel like it's important that we're one of the most reviewed local title companies around in our area, and it's really benefited us in a positive way because it's how we buy things on Amazon. It's how we really go about finding anything, and going forward in that, we even text message. We think it's a big part of the millennial generation. They want transparency. So through the process, the buyers also made aware of when that title commitment is coming out, and a receipt of when title's ordered, and when settlement's getting scheduled. Not just an email, but a text message, because that's what people are seeing. So we're always working on technology to keep not just the realtor and lenders we work with informed, but also the customer, you informed.
Yeah, awesome. So we're gonna go ahead and head over to our last bit right before we check out our Q&A. The first question is for Mitch, and I'm also getting questions through my phone, guys, so I'm trying to check in. I'll keep it short and sweet since we only have a couple minutes. The first question is, when I get pre-approved, what documents do I need to have? What's my buyer packet?
So for the pre-qualification, we just need your basic information. We need to know roughly what your income is, what your job is, how long you've been there. And as we work towards a pre-approval, that's when we need your pay stubs, your bank statements. But initially, it's really just a conversation of information gathering. That's all you need for the initial conversation. And as soon as we get to start looking for the house, we're working towards a pre-approval, which is getting more information, pay stubs, W-2s, bank statements. But in most cases, it's typically a year of your tax returns, a year of your W-2s, 2 most recent pay stubs, and 60 days worth of bank statements is the documentation you need to submit for basically bank approval, but that is not necessary to do a pre-qualification initially.
Awesome. The second question we have is about getting married during the process. How does that affect you via title or via lending portion?
So, I was joking about these changes that people do, but we have the documentation set up, and it has to go through underwriting, go through a process, and the title company is also doing a lot of work to make sure everything is named properly. So when you change the name, we have to go back and readjust all that paperwork and make sure all the names are accurate. If we're processing your loan as Jane Smith and we send it to title company as Jane Smith and all your docs say Jane Smith and you just got married and now you're no longer Jane Smith, to prove you own the house, we need all the supporting documents to show the name change. So now we need the marriage certificate, all that paperwork to support it. Then we have to show that the name was legally changed, and we have to change it on all the documentations. When we order the appraisal, it has your name on it. When you order verifications of employment, it changes all the documentation throughout the process. So it's just a lot of changes that would go into effect.
Awesome. Would it affect your income since there's two people now instead of one?
So, you don't have to be married to go on an application. So if you're married or if you're engaged or you're just a couple, we are always looking at all those options. That's an excellent question. If you want to add your partner onto the loan, you don't have to be married to do so. There are certain types of loans like VA loans where you need to be married. That's the only way you can add a non-veteran spouse. But in most programs, you can put just sisters, brothers, cousins, friends, fiancés, husbands and wives on the loan. And all those, in most cases, hopefully improve your chances. If you're adding someone and they don't have income or they have bad credit, that could reduce your approval. So we're looking at all those options to figure out what puts you in the best scenario.
Awesome. I have another question. This was about the inspections fees. So inspectors are independent. Most of them are independent contractors, if I'm not mistaken. Please correct me if I'm wrong, Mr. David. And they determine their own prices. And so that means that you would either look up a lender via Google, or any other websites of your choosing to find an inspector that can inspect your property, or you can work with a realtor who may have a list of recommendations for you. And in that way, they would know what the general prices are per inspector and for whatever job you need done. When it comes to renovations, that looks a little bit different. So if you're looking to kind of add sort of like you want to change the way the house looks, get new flooring, things of that sort, you want to work with a contractor. And so that will come at a later stage. But in the beginning, we're looking at inspections. That's definitely a part of the process. It's important that you have an inspector. But in order for you to, if you don't feel comfortable looking on your own, work with a realtor that you care about. Hi. And we have lists of inspectors that we can recommend for you. And then they can also talk to you about what their prices are, depending on what your needs are, which varies by property. So it's not necessarily a location situation. It's really per individual, depending on what you're looking at. The other question I have is if someone has child support or is paying child support, does that prevent them from being able to look into buying a home, or how does that affect their home buying process? Either of you can take this one.
So it's a lending question. So basically, if you're receiving child support, that's additional income you're receiving that will actually increase your income and help you qualify. On the flip side, if you were paying alimony or child support, that could decrease the amount or prevent you from qualifying. So once again, that's why you want to use a lender that has experience, because they're not only looking at your primary job. Do you have a second job? Do you have other sources of income? Do you have other sources of debts you're paying? You're paying alimony or child support. There are certain programs where if you have student loans, even though you're not paying them, we do have to count them. Some we don't have to count them. So all those things, student loans, child support, alimony, come into effect. Loans on people's personal 401ks could sometimes affect you. And the rules and regulations and all these things are constantly changing with different programs that we offer. So there's always a lot of moving pieces going on. But to answer the question, yes, that could help a single mom now qualify who wasn't able to before. And then we take into consideration her alimony or child support. Or if she's paying alimony or child support, then that could hinder her chances of qualifying.
David, did you want to take a thought about it?
No, Mitch covered it. You just can't be behind in child support, or it can be a problem.
Don't be behind. Got it. Thank you. Okay, so we have a comment that says this is a lot of good info. Thank you all. So we thank you for listening. We really appreciate it. We have one more question before we check out. Which is an interesting one, which is like, how do we discern who's a good lender versus a not so good lender, or a good title company versus a not so good title company? Like, what are some things we should be paying attention to is the question.
So I'll take a stab at it. So you always want to see, hey, are they responsive? Do they answer your questions? Do they treat you like you want to be treated? Do they offer a variety of programs? Me as a lender, I tell my clients that if someone presents a better offer that makes more sense, we're going to look at the rate. We're going to look at the fees associated with it. We're going to look at the whole picture. And if that deal is better, I would be the first one to advise you to take that other deal. We're going to do everything we can to win your business, but if it's a better deal, the bottom line is we're going to do what's in your best interest. And our job as a realtor, as a title company, as a mortgage guy, I think these guys agree to do what's in your best interest. And if that's not me for any particular reason, believe me, I would not suggest using me in that case. So, you always want to due diligence, get recommendations, use people you can trust. We all get our business through word of mouth. So the best thing you can do is go to friends, go to family, go to professionals you're working with and have them recommend people to you. When you go on the computer in some cases and call these companies and they send your information to 30 other companies and they're pulling your credit and doing all those things, you'll feel that they're not doing what's in your best interest at that point, and you're just part of a bigger marketing plan. So use somebody local you can trust and ask questions, and you're never going to offend us. You're never going to upset us. We're here to help you. You've done us once or twice. We've done it quite a lot. So that's what we're here for.
Of course. David, what about you?
Yeah, I would say really when it comes to title, use who your realtor or lender recommends because they know who to get on the phone with if they need this or that. They know who to go to. I would just really recommend, going off of their referral because they're going to have more experience on really who to reach out to when they need to, because they're going to be more involved in that process than you are.
Of course. And I would say as a realtor, if you are suggesting things to a realtor or a party and they're not necessarily responding to you, or they are not doing the things that you asked or taking you to see the things that you want to see, that's definitely a red flag. Not only because it wastes time, but also look at the market that we're in. We're saying that it's a seller's market. We're saying things have changed, and we're also saying that things are moving quickly. And if your realtor is adding time to your time clock, they're not necessarily doing their job at this point in time. So that's kind of one of the ways that you can sift through. The other thing is the conversations that you're having. If it doesn't feel warm and welcoming to you, then maybe you should look into changing realtors. It's also to know that, like, if you sign a paper, so there's something, you do sign something with the realtor saying that you want to work with them. If you're in a situation where you've already signed that paper, you can say to the realtor, I don't want to work with you anymore. I want to work with someone else. And that contractual agreement, that relationship can be released. So you do have that option. And on the flip side, if you want to work with a realtor, there is a paper for you to sign to say, this is our relationship. It'll be for X amount of months. This is what we're gonna do. And this will be the person that'll help you find your new home. And so that's pretty much how it works on the front end. So if you want to switch, I've had have a few questions about folks who want to switch maybe, or are not necessarily sure if the realtor that they're working with is right for them. If you're questioning it, you should probably continue to look. But if you're already in the process for a house or something, you probably should wait, or if you have an attorney, ask your attorney to kind of advise you if you're already under contract. Mitch, you had something?
Yeah, I want to say the same thing with a lender. Just because you come to me or any other lender and they pre-qualify you, you're under no obligation to use them. If you feel uncomfortable and something goes wrong, you have the right to use whoever you want to use. If you're far into the process, they might have to switch appraisals. But if you're just getting pre-qualified and then you find a house and you want to test out another lender, there's no real restriction. What we do is a free service when we qualify you. There's no charge for doing that. There's no charge for the consultation. There's no charge for doing a pre-qualification. And then if you decide not to use me, that's absolutely fine. And there's nothing trapping you or requiring you to do so. So I just wanted to mention that if you're working with a lender and you're not happy.
And even for realtors, I mean, if you're a renter, it's most likely that you won't have any fees with the realtor, because the realtor will get paid by the company or the apartment complex wherever you're trying to stay. And it kind of works that way sometimes with properties as well. Most often on the buyer side, this is the buyer seminar. So on the buyer side, usually the realtor gets paid at the closing from the seller. So it's little to no cost to you when it comes to on the realtor side. There are some properties where they would prefer the buyer be paid, the buyer's agent be paid by the buyer, but that's far and few in between. I haven't seen it yet in my tenure as a realtor. But it is out there, just so that you know that those things do actually exist. But as a renter, I always say use a realtor if you can find one. I definitely would have wished I used a realtor when I was looking for housing in college. I would have probably been in a lot better situation than I ended up. But I graduated nonetheless, so I guess it worked out well in that way. And even on the other side, as a buyer trying to buy a home, you definitely can use a realtor, and most often they get paid from the sellers. So you don't necessarily have to worry about costs in that way. So do know that those things are available to you. I do have a few more comments popping in. Very good presentation. I'm listening with other people. We're super excited. Hopefully I can keep this information in the near future. So we are getting some great comments here. Thank you both for coming to this seminar with me, being my guests. We have Mitchell, Freeman, and David. I am so excited and so elated to continue to work with them. If any of you in the group have any questions, or if you want to share this video, it will be available to replay for you, so that you can again and take notes. There's also a worksheet that is in there, and it's there. This worksheet, it is downloadable in the Facebook group under the Files tab, so that you can go back and take notes for some of the things we said. Share them with friends and family. We want this information to get out as far and wide as possible. I know we have a few watch parties. I hope you all enjoyed this session. Thank you both for coming and celebrating and having this seminar with me. Thank you so much. We are out of time, but I just wanted to say thank you.
Thanks for having
us.
Awesome. I will check with you all later and stay connected, but we're going to go ahead and head out. Thank you.
Bye now.
Bye.
If you stayed this long, shout out to you, because I'm sure you left with more gems than you came with. Make sure to subscribe and tap the bell icon so we can stay connected. And you can follow me on Facebook or Instagram at The Keys to Real Estate. See you later.